This is the welcome Indian cricket team received in Mumbai after they won the 2024 T20 Cricket World Cup. BCCI also announced 125 crore rupees as prize money for the winners in addition to the 94 crore rupees given by the ICC. As an Indian cricket team fan, I am damn happy with their achievement. But one thing always runs in my mind. What is the difference between top 3 cricket players and top 25 cricket players? What qualities separate these top 3 cricketers from the remaining top 25 cricketers? Right now, if you ask anyone to name the top 3 cricketers in India, most people say Virat Kohli, Rohit Sharma, and Jasprit Bumrah, right? Earlier, anyway, we had Dhoni, Sachin, Dravid, Kapil Dev, Saurav Ganguly, etc. Now the question is, these top 3 cricketers, do they receive any separate secret training from anyone? The answer is no, right? Do they have a separate coaching staff? The answer is no. Do they eat and drink separate food which is not available for other players? No. The gap between these top 3 and top 25 cricket players is often subtle but significant, friends. The subtle difference is their mental toughness. They can bounce back from setbacks and maintain their focus under stressful situation, which is crucial for sustained success. Difficult to believe? Just take the example of KL Rahul. Every cricket expert agrees that he is an exceptionally talented player who can play attacking as well as defensive cricket shots in any batting order. But he failed to grab a chance for the 2024 Cricket World Cup, right? Now we will come to trading. Trading is like a game where your mind is the strongest player. A calm and focused mind help you to make smart choices even when things get tricky in volatile market. However, most beginners focus only on trading strategies, ignoring the importance of a powerful mindset. Friends, with my folded hands, I request all of you to focus on developing the right mindset. Anyway, I have made enough videos on trading strategies, but in this video, I would like to explain 10 important lessons that help you to develop a strong mindset. So I request you to watch the video till the end. How to overcome bias? This is one of the important lesson which troubles most of the intraday traders. It happens like this. So one day you notice Nifty gives a very big move on the upside. It closes on the upside. So because of this move, you will maintain a bullish view on the next day itself. So tomorrow on the next trading day, market opens with a small gap and you will take a long trade. But market goes a little upside and comes downside. It hits your stop loss. Now the thing is you will take, because of your bias, previous day bias, you will take one more long trade. Price goes little bit upside, it goes down once again, hitting your stop loss. It keeps on happening like this. So finally you end up losing major chunk of your capital just because of your bias and then revenge trading. Okay, so we'll take one simple example. Let's say, this is Nifty 15-minute chart a few days back. So you can see on this particular day, Nifty displayed a very big move on the upside. The original trend was also up, and on this particular day, Nifty also displayed a very big move on the upside. So because of this move, you will maintain a, or you will keep a bullish view for the next day. So you always prefer to take a long trade on the next day, because you might have heard the quote, go with the trend, don't go against with the trend, everything. So because of all these thought process and because of yesterday's move, you decide to take only long trade on the next particular day. But and the next day, what happens is price opens with a little gap above previous day high, and it displays this candle. So with most of the beginners, if they are intraday traders, they would have taken a long trade at the open itself, because yesterday they have noticed a very big move on the upside. The original trend was also up on daily charts, so they would have taken a long trade after seeing this candle. So in my experience and suggestion, taking an open action trade in between 9:15 to 9:30 demands a lot of skill. It is not easy, friends. It demands a lot of skill, and it requires skill actually. So if you are a beginner to intermediate level trader, you can always plan to take responsive trades which come after 10:15. But with this particular example, so observe this candle very, very carefully. Number one, it displayed open high, right? Open high is bullish or bearish? Open high is bearish, deadly bearish, right? So it displayed open high, which is bearish. Also look at the size of the candle. It engulfed almost last 6-7 the candles, right, on the same time frame. It engulfs all the 6-7 candles, so which is also bearish. There is a small buying wick, on the particular candle, but that is negligible. So whenever you see this candle, you should change your bullish view to bearish view. Or if you know it is if I know it is very tough for beginners. Even if you can't change the view, at least you should maintain not bullish view after seeing this candle. Okay, you should maintain not bullish view. You can continue with your bullish view only if the next on the next few candles, if the price breaks the open high level. Okay, if the price breaks the open high level, then only you can continue with your bullish view. But until that point, you should maintain not bullish view, isn't it? And you can see what happened on that particular day. Because yesterday it is a bullish day, there is no doubt about it. But you should remember, market runs 24/7 in people's mind, and overnight some scenarios might have happened which is not bullish or bearish on markets. So that impact you can see that impact on the open candle itself. Okay, so that's what happened in this particular day. So we'll take one more example. So once again, this is Nifty 15-minute chart for, it's a couple of days back. So Nifty is in a sideways trend, right? So Nifty is in a sideways trend, very clear. But the previous day, it failed to trade above the high, and it displayed a bearish views with big bearish candles, and it also closed at the day's low, right? So because of this move, let's assume you will maintain a bearish view for the next trading day. So it is fine. Maintaining a view or keeping a view is not at all fault. It is okay. But observe the first two candles. Okay. So anything below previous day low belongs to both sellers and buyers, right? For example, if the sellers are really strong, so they should have pushed the price on the downside. They should not bring back the price, into the previous day range itself, right? So observe the first two candles. It opened with a slight gap down open. Price tried to tried to break the below the previous day low. However, buyers pitched in. Observe the buying candle on both the candles. So buyers pitched in, and their power pushed the price on the upside almost into the previous day range, right? It's very close to the previous day low. So once you see these two candles, you should not continue with your bearish view. So this is very, very important. I will repeat it, friends. Once you these two candles, you should not continue with your bearish bias, isn't it? Now you can see what happened. Okay. So these are the very important lesson, friends. So the basically the let's say you have a bullish view on a particular stock. So if at some point of time, if the price displays bearish engulfing in at least 15-minute or 30-minute chart, no, you should not continue with the bullish view because it displays a bearish engulfing, which is a powerful bearish pattern. Okay, this is one thing. Let's say you have a bullish view on a particular stock. If the price opens with previous day low and it starts accepting at previous day low, you should not continue with the bullish view, right? Because it opens below previous day low and it is showing acceptance below previous day low, means buyers are not coming. That's why it is staying below previous day low. Even in that case, you should not continue with your bullish view, friends. So lesson number one, how to overcome bias. This is very, very important. Remember these points which are very, very important to maintain this lesson. So always never go against the laws of nature and the laws of stock market. Okay, that's very important. Never fight the price and never compete with the markets. So that is also very important. Always be ready to expect the unexpected. Anything can happen in the market at any point of time. So this is also very, very important. So pro traders always take the responsibility and losing traders always play the play game. They always play big players. Okay. So always remember these lessons. Always think anything can happen in the stock market. Then you will be able to maintain and overcome this bias problem. Importance of exit. I want to highlight one important thing in this case. None of the traders can make the right exit with all their trades. I'll repeat once again, friends. None of the traders in this world can make the right exit with all their trades. For example, let's say you will buy a stock at 100 rupees. The stock price goes up to 200 rupees and it comes back again after that. Do you think anybody will have a third vision or sixth sense saying it will come back from 200 only so that they can exit at 200 only? It is not possible. By accident it can happen with one trade or two trade, but in the long run it is impossible, practically impossible to exit at the top, right? If you have taken a long trade, it is impossible to exit at the top side. If you have taken a short trade, it is impossible to exit at the right bottom. Exactly, it is not possible. So we need to define certain rules towards the exit based on the trading strategy and your trading mindset. Actually, see, for example, in this case, let's say this is the previous day high, this is the previous day low. So your plan is to take a initiative buying trade. So price opened here, you will take a long trade here. This is just for an example perspective. Okay, so this is your stop loss. Now you have taken an initiative buying trade. Now do you think, or by any chance you have any special power to know the market will close only at 24,851.75? No, right? It is not possible. So definitely you have to realize one thing: it is impossible to exit at this level, right? You have to make a peace with this concept. Now what you can do is, so after taking the entry in this case, you can draw the important reference level. So this is one of the important price level. So next is, this is one of the important price level, right? Because this is the previous swing high, this is one important swing high, because from here the nifty selling started actually. So these two becomes, this level and this level becomes important price levels for your trade. So how you can design your trade is you can exit 50% or 75% or 25% of your trade here, and you can carry, one after the exit you can trial your stop loss to the entry price. Okay, so and then you can carry the remaining portion and you can plan to exit here. Again, it depends. See, for example, if you exit all the position here, if the price goes upside, you get emotions in your mind, right, for the missing profit. Suppose, let's say you wanted to exit at the second resistance level, you carry all the position, but the price goes up like this and comes back like this and hits your stop loss. Again, you feel bad, right? So you should modify or alter your strategy so that it triggers least emotions in your mind. Definitely, whatever the exit strategy you choose, it is going to trigger some sort of emotions in your mind. That is 100% sure. There is no exit strategy in this world which triggers zero emotions in your mind. Any exit strategy will trigger some sort of emotions in your mind, but you should pick this one exit technique which triggers least emotions in your mind. So in this case, what you have to do is, the best idea in this case, what you have to do is, let's say you have taken an entry here. This is your entry for the long trade. So this is your stop loss. Okay. So as I said earlier, this is one of the uh, important level, and this is one of the important level. So what it comes here, so what you can do is, so at this level you can plan to exit 50% of the position. Okay, so once you book the profit for the 50% of the position, you can shift your stop loss to the entry price. Okay, so after this, if the price comes back and hits your stop loss, at least you would have made the profit for the 50% of the position, right? So if the price goes upside, again, anyway, you can book remaining 50% of the position here, right? So in this way, even if the price comes back, you would have made profit for the 50% of the position. If the price goes upside, anyway, you would have carried 50% of the position, right? So this is the one of the simplest exit technique according to me in intraday trading, which triggers the least emotions. Now there is another trading day. See here, for example, this is the previous day high, this is the previous day low. So price opened and displayed, doji candle. The first candle is doji and the second one is selling, third one is buying. So if you observe the first 2-3 candles, first candle or 3 candles together, it clearly indicates that market is set for a sideways move inside previous day actually. So now you should not expect any aggressive target on this particular day. In fact, you should not plan or you should not take any directional trade on that particular day itself. Okay, so this is how one should plan one should plan their exit techniques actually. Okay, so the important lesson is, ensure your trading systems gives you an edge with good risk reward and high accuracy. So once you make a plan for your exit in your trading system, then fix it. Okay, so definitely there will be some trades, it shows that you would have made more profit if you would have broken the rules. Okay, don't worry about such kind of things. Don't try to change the rules because of those trades. Okay, so always try to execute your trades according to your trading plan. And next is, always remember, it is not possible to catch all the excellent trade opportunities in the market. I will repeat once again, friends. Always remember, it is not possible to capture all the excellent trade opportunities in the market. So if you remember this, exit problem is over. Number 3, fear of losing money. This problem looks very silly and simple, but this is a very serious problem for most beginners. I want to share my experience when I started learning trading when I was working with IT. So, whenever I lose even 1000 rupees or 2000 rupees, I used to feel very bad. But I had a colleague, we used to take trades together. Even if he loses 5,000 rupees, 10,000 rupees, he was okay. He was behaving normal and he was feeling normal actually. But in my case, I used to feel very bad even if I lose 1,000 rupees or even 2,000 rupees. So when I dig back, I realized my upbringing was different and his upbringing was different. So most of us, we have a common upbringing. Like our parents always say, our relatives always say, our friends always say, you are in 10th standard, you should not fail. You are in 12th standard, you should not fail. You are in degree, you should not fail. Okay, you are giving an interview, you should not fail. We think that failure is really bad. So even if we lose 500 rupees, even a small amount, 1,000 rupees, we feel bad not only because of the money, but we feel bad more psychologically because we have lost the game. Okay, so but in my friend's case, he came from a business family, so he already had the experience of losing the money. Okay, so that's why he was very comfortable, but I was not very comfortable. So I'm damn sure most traders will have the same situation. Whenever they lose even a small amount of money, 500 rupees, definitely you can easily afford, you can easily lose that amount of money. But still you feel bad because of the past upbringing and experience actually. Even if you win just 500 rupees, you feel very high because you think that instead of 500 rupees, you think that you have won the game. So because of those things, you feel very high, right? But how do we control these things in trading actually? But you should always remember, friends, failure is inevitable. I mean, none of the person in this world can take trades with 100% success. There will be some failures actually. Even if you pick a trading system which has 80% accuracy, definitely you will face 4-5 consecutive losing trade at some point of time. So failure is inevitable. So you need to bring this thing into your subconscious mind. Definitely in trading there is a possibility, there is a chances of failure. So what you can do is always try to risk less for every trade so that you will have less pain. For example, in one scenario there is a losing trade, you lost 500 rupees. Another scenario, you have a losing trade but you lost 5,000 rupees. Which one gives more pain? Actually this one, right? The trade which you lost 5,000 rupees. So that's where you need to have a clarity. Try to risk less for every trade until you get some mastery in your mind. And second thing is you can practice some affirmation, like now there is a possibility of failure in trading. In fact, not only in trading, you take any business, even a small street vendor who sells some idli, vada or dosa on roadside, even he has a possibility of failure, right? He can lose some money on any point of the day. So you should always have that clarity in your mind and you should always progress. So if needed, you can practice affirmation or you can also practice meditation. You ask one question to any person who started trading recently. How much money you are planning to make every month? Most people say I'm planning to make 40,000 to 50,000 rupees every month. Next, ask one more question about their capital size. It will be around 2 to 3 lakh rupees in India. It means people are planning to generate 20 to 25% of the returns every month on their capital, even though they are very, very new to the markets. The world famous investor Warren Buffett has generated only 20% average gross year returns every year, not month, okay? And all of us aim to generate 20 to 25% returns every month. Assumption of winning sequence. I will toss a coin and you have to guess whether it is a head or tail. The probability of head or tail is 50%, right? It means if we toss a coin 100 times, 50 times we get head and 50 times we get the tail. Do you agree, friends? Does it mean we get head and tail one after another in the same sequence, like head, tail, head, tail, head, tail? No way, right? We may get head or tail continuously for some time before we get the opposite side of the coin, right? Now think, don't you think we should apply the same logic in trading as well? Let's say you have a 70% trading strategy. I mean, the accuracy of a trading strategy is 70%. It means out of 100 trades, 70 are profitable trades and 30 are losing trades, right? Do you think we get one profitable trade after a losing trade every time? It means like WL. W stands for winning. WL and L stands for losing. WL, WL, WL. No, right? Our expectation itself is wrong, right? So there is also a possibility of getting many losing trades in one stretch, one after the other, right? For example, WL, WLLLLLLLW, right? Now, what if we risk 5% of our capital on each trade? Easily we lose 25 to 50% of the capital when we face that situation, right? Gaps, especially big gaps, are always an headache for all types of traders. You ask any trader, whether he is an intraday trader or scalper, BTSC trader, swing trader, positional trader, even an investor, these big gaps always brings headache on the table. So when I was working in IT, I used to attend almost all the weekend workshops which are conducted by the professional traders. So in one such workshop, I asked this question to the trainer because he said he was a BTST trader. So I asked him, what do you do in case of a big gap up open or gap down open against your position? But what he said was gaps always opens against, I mean towards his direction. So I didn't agree to it because gaps can open on any direction. It can open favoring your direction, or it can open against your direction as well. So if we don't have proper money management rules, they always brings risk on the table. And especially for intraday traders, gaps are always headache. See here, for example, on this particular day, it opened with a big gap down open, but it filled the gap, right? It went upside. So after seeing the gap down open, if you think the price is bearish, it failed you wrong. Actually, it went upside, right? See here, for example, from here it opened with a gap up open, but we witnessed gap, bearish movement, right? See here, once again, Nifty opened with a gap down open, but it went into sideways. See here, there was a gap up open, but went downside. See here, gap down open, but it went upside. See, you cannot say if there is a gap down open it always goes up, if there is a gap up open it always comes down. Sometimes vice versa also happen. What happens is there will be a gap up open, price goes upside. There will be a gap down open, price also goes downside. So you cannot make a rule for gaps. Actually, I know there are many traders who made many videos on gap strategies, but personally as an intraday trader I always felt playing these gap up opens are bit tricky actually. See here, for example, there was a gap up open, price went upside only. So here also there was a gap up open, it stayed sideways to upside. See here, gap down open, but it went into sideways and then it filled the gap. Basically, it went upside. See here, gap up open, sideways. Gap up open, sideways. Gap up open, downside move. Here also gap up open, sideways. So this is the situation of Nifty. If you check Bank Nifty, see here gap down open, big gap down open, it filled the gap. But in this case, big gap down open, it went into sideways. Little gap up open, it went downside. Gap down open, sideways. Gap down open, it filled the gap. In this case, big gap down open, it went into sideways. Big gap up open, see it moved upside actually. So these kind of things also happen. So you can't make any specific rule. If there is a gap of open, we look for a long trade or short trade. We can't make any specific rule in case of a gap of open. So if you are an intraday trader, I always suggest, if you trade, for example, Nifty, in case of a big gap open, either upside or downside, I would suggest you avoid trading Nifty on that particular day. You can look for some other instrument like Bank Nifty, Fin Nifty, or even a stock. Okay, so that is one possibility. Suppose, let's say you trade in stocks. Let's say in intraday perspective, you trade in stocks, 4 or 5 stocks. So in that case, you can skip the stocks which displayed the big gap up open, either upside or downside, because when you skip these kind of big gap up open stocks or instruments, it always brings peace in your mind. You can always apply your trading strategy as it is, and you can take trades. So this is really peaceful. So you should always learn how to make peace with gaps. It is, I will not say it is very impossible to make profits using the gaps, but in the long run it is always bit risky, and it's emotionally challenging to play the gaps every time. So I would always suggest to skip the gaps, skip the instruments which displayed gaps on any trading day, and your trading life will be really, really peaceful. It always brings less emotions on the table. Number 6 point is revenge trading. Friends, have seen many traders who lost their entire capital or most of their trading capital within 1 day or 2 day, but I have not seen a single trader who lost their entire capital over 100 trades. I'll repeat once again. I have not seen a single trader who lost their entire capital over 100 trades. So what it means is, people will have a view, either a bullish view or bearish view. They will take the trade, okay, and price comes back and it takes their stop loss. So they will get revenge attitude. They will be in revenge trading mode, and they want to prove to the market that their view is correct. So how they do is, they will take their trades again and again, again and again in the same direction. Market will be going in one direction, they will be taking trade in the another direction. So by doing this, they will lose the majority of their capital. There is a principle called as Pareto principle. 80% of the results comes from the 20% of the uh, 20% of the situations. For example, 80% of the losses in your trading, they would have come from the 20% of the trades, isn't it? Similarly, 80% of the profits will be bought by only the 20% of the trades. So this principle is a universal principle. So even if you get rid of that revenge attitude, you will stay as a break-even trader. At least in worst scenario, a small loss trader. So if you survive in the market either as a small loss trader or a break-even trader or a small profitable trader, it's all about small fine tuning, right? It will automatically increase your profits. So number seventh is, don't compare your result with others. So friends, in fact, actually there are only two reasons you feel bad or miserable in life. So whenever you expect something from somebody, there is always a possibility of feeling bad, and whenever you compare yourself with others, it always brings misery in your mind. So even in trading, don't compare your results with others. If somebody posts 1 lakh rupees profit or 5 lakh rupees profit or even 10 lakh profit on any day, don't compare, because their trading capital will be different, and their skill, their experience is always different, right? So you should not feel bad. In fact, I have taught trading to some people. In fact, some traders, they are making more money than me, so I don't feel bad. Whenever I feel bad looking at their result, automatically it will bring down the results of my trading. So always, if possible, try to avoid looking at the profit screenshots shared on social media platform, because any profit screenshot will not teach you anything. It will not teach you about trading, taking an entry or taking an exit. It will not teach you money management rule, right? Or it will not teach anything. It will only bring your emotions. It will increase your emotions in mind. So always remember this. Don't compare your results with anyone. Number 8 is take a break. See, friends, trading should be only the one small aspect in your life. So many people will make trading as their life itself. So don't commit that mistake. Even I have done this mistake in the beginning of my career. So you should always consider trading as a small aspect in the life. So whenever you get agitated, or whenever you get into revenge trading mode, or whenever your emotions are high, there is always a possibility of making more mistakes. So whenever you are in such a situation, you always take a break. Close your system, shut down your system. You go outside, you can watch a movie, you can go for a drive, you can go to some other town, you take a break. So this break always help you to relax your mind, and more importantly, it avoids making further mistakes actually. So number ninth is take responsibility and stop complaining. I've seen whenever if the broker site is down, people start complaining about it, and next day they will continue with the same as it is, same broker. One more, sometimes something will happen, and again they will complain. Next day it will continue as it is. See, you should take responsibility, friends. If you complain your broker, or if you complain somebody, or if you complain sebi, or if you complain your family, it is not going to help you in market, because market doesn't care. Market don't know you have this problem. So what market does is, if you are right, it gives you money. If you're wrong, it takes back your money. I always say one thing: only entry and exit decides the fate of your trade, irrespective of your educational qualification, experience, or reputation in the market. So always stop complaining. If the broker site is not working properly, you can always switch to a broker. Or if you don't want to switch the broker, you can always open an account with another broker. If this broker goes down, take the opposite position with another broker. Okay, so in this way you can always manage actually. And number 10th is, you should always remember, successful trading is a journey and not a destination. In the past, whenever I thought, oh, I am done with learning and now I know my learning is over, I can always make money. Whenever I have the thought in my mind, I always lost money on that particular day. So always remember, successful trading is a journey. It is a never ending journey, and it is not a destination. Okay, it is not a final point. It is always a journey, and every day, on every trading day, there is something to be learned. You should always keep your mind open and always look for lessons. There is always something to be learned. Okay, these are the 10 points. These are the 10 important lessons which can help you to become a successful trader, friends. If the content is really helpful, please like the video, subscribe to my channel, and you can always share with your friends. So we will meet you in the next video with another useful content. See you. Thank you. Bye bye.